All right, we're live now. But yeah, like the Chicago Red Line is always an adventure. Um, do you I remember you were saying that you don't you're still you're still fully remote, right, for your job?
Yeah,
Yeah.
so far I've been fortunate enough to be able to be at home. So I'm slowly building a home office,
Yeah.
which is kind of
Yeah.
interesting in my living room.
It's a little awkward if they don't set the expectation, like, hey, you might come back into the office, and so you don't like want to take the plunge to set it up at home or something like that.
Yeah.
Yeah. Yeah.
So far the expectation is that potentially sometime, but much less than pre-pandemic in the office. So
Yeah.
who
Fair.
knows? It's
Fair.
per team, which is nice. You know.
Yeah. Makes it easy enough. Yeah. We're still like a couple days per week, or it's supposed to be 3 days a week in the office, but not very many people actually do that. So I try to do like twice a week, and I was in today. We've had a couple very beautiful days here in Chicago, which has been actually pretty nice for once after a horrible month of like 40 degrees and raining, cloudy, and that was rough. So we're finally up in the 80s now, which
Yeah,
is nice.
we were being teased the whole month of April. There were a few days that were just wonderful, and now I think we've broken over the hump a little bit.
And as the weather has turned, the market has done the opposite. It has rolled over. Um,
Has it?
yeah. Have you been doing anything like any action in your portfolio? Have you been just kind of watching and waiting, or there's
Not
a lot going
even.
on. So
Yeah, not. I mean, there are moves that I want to make, but there's a delicate balance between selling out of positions that I like kind of
mhm.
already versus, you know, because the cash inflow. I'm in a unique period. I'm in a saving period in my life, saving for life expenses, not just for the long term. So I
The
usually
stuff
most of
that
my savings
matters.
goes. Yeah, right.
Yeah.
It's a
When
wedding season. So,
sure. Um, you own your home, right? So
yeah.
probably not a home purchase anytime soon, or are you looking to upgrade or anything like that?
Mm,
Yeah.
maybe. Yeah.
Yeah, it's
Who
always a
knows?
possibility.
Yeah. Yeah. It's pretty expensive here in Chicago. So,
Yeah, in
yeah,
some
right.
places. In the
Right.
places you'd probably like to live. It can get pretty expensive.
Yeah.
We're going
Maybe.
through we're doing some research right now because I'm actually in a similar boat with trying to conserve some cash because I'm anticipating making another property purchase soon for our house. Um, so I want to have some cash set aside either for reserves or to do part of the down payment before I leverage the rest. Um, and the question is whether we're staying in Chicago or not. My wife's actually interviewing today. She's been interviewing a while for her job, and where she lands a job would probably determine where we go. Um, and right now we're looking between Chicago or potentially Houston as well. Everything's still kind of up in the air, but we're working on that right now, and um, I just want to be ready for that because even if there might be some great buying opportunities now, it's like weighing that balance of like, okay, do I want to go for it now, potentially lose half in the next month, or do I want to keep it liquid for a property purchase? It's a little bit strange right now. Um, so is that kind of the same vibe you're going for? Like you're anticipating making some purchase in the next few months and just don't want to put it in stocks?
Well, it's not that I don't want to put it in stocks. It's
Well, yeah, I
just,
shouldn't say that.
uh, unfortunately, I'm not able to predict what's going to happen over the next 6 months,
And no one
and
can.
I need liquid cash. So, um, but that's why, I mean, maybe I haven't been investing that long, but maybe the past couple years I've been too aggressive contributing to the portfolio and maybe not putting enough into an emergency fund necessarily. I mean, um, the market has been really attractive, I guess. Well, it's been growing a lot, I suppose, but not that there have been too many opportunities that I would deem acceptable as far as value, price to
Yeah,
value.
it's a spectrum.
Yeah,
Yeah, it's moving.
yeah.
Um, I guess now would be a nice time to introduce my excellent guest here, CJ Wilson, who is a fellow finance YouTuber for anyone tuning in now or afterwards. CJ is also a fellow Chicagoan, and we both have very similarly sized channels as well. He talks about stocks, investing, a lot of the investing greats as well, and has some really good content over there. So go check out his channel if you have not already. But anyways, with that out of the way, are you looking at adding to your if you had more cash beyond these expenses, would you be looking to add to existing positions, or are there some new ones that you're really eyeing towards?
There's one. So I have one small position. I'll be transparent about this. One really small position in Nintendo. That, I mean, it's an insignificant, maybe 1 or 2% of my portfolio. That I would really like to add to. So that's one position that if I had more cash, I'd probably put a little bit more in there. Um, and then there's another one that I don't own that I'm still very interested in as the price continues to decline, and that's the Daily Journal.
Mm.
I think that's pretty attractive from maybe looking 5 years down the road, I think.
If you
If
can
you
crack
have you
the
read
code.
Matthew P Yeah, right. The thing with Daily Journal and why it's not already in the portfolio is because, a lot of the thesis is based on I don't know if you've read Matthew Peterson of
Some here
Peterson
and there,
Capital
yeah.
Management. Yeah, he has a bunch of in his annual letters, write-ups about Daily Journal, and he has gone through with his team and gone through all these different committee filings of a bunch of jurisdictions and courts and around the country, even around the globe, and basically found contracted revenues that aren't reported in the financial statements because of the way Daily Journal recognizes revenue. Once they complete the work, then they recognize the revenue. So basically, there's a lot of hidden revenue, high
Yeah.
margins for the tech. So, but that I haven't gone through any of these
Yeah.
any of the minutes myself. So that's kind of the only hesitation. Not that I
Yeah.
don't trust Peterson. So
I'm in kind of a similar boat. I saw some of his findings a while back. We're talking many months now, and it's like, okay, that's interesting, but that seems like a big tall order to really dive in, and um, it could definitely be worth it. But there's so many other things to potentially buy as well. It's like, yeah, I don't know. It's always easy to pass, I guess. In the world of value investing, at least, where at least in this market, where it seems like so many things, even now after the pretty substantial pullback in a lot of stocks, a lot of them still seem quite overvalued, depending on how you're looking at things. So um, it's a grinding game. I think I titled this stream like the discipline of investing, so it kind of goes to that. I needed to think of some title for this. So uh, it really tries you. I gotta ask because I wrote like one of my first tweet threads that actually did quite well over
nice.
on Twitter. I'm trying to get a little bit more active over there. And I was talking about how my stock portfolio is down, and uh, despite that, my net worth is up. And I was talking about focusing on trying to produce more income while you have a small portfolio rather than getting too caught up with your investment returns. And I talked a little bit about that Bill Ackman return on invested brain damage metric, where uh, you have to value how much stress a particular investment is giving you. That's part of the equation, because if it's taking time and mental energy away from other things, then that's a cost, and it's kind of hard to quantify it, but it is something. So to that, do you feel anything during these times when I'm sure you have stocks in your portfolio that are going down substantially, and do you get stressed? Do you have to constantly remind yourself to hold fast, or how do you address that?
That's a really good question. That's goes right to the key of investing, which is human nature, and the
Temperament, yeah.
reaction to these ebbs and flows. But on the whole, I mean, the market going down. I, I I don't want to sound like I'm some robot, but it doesn't bother me. I mean, I'm barely even looking at it. The only reason that I even know that there's kind of trouble is because of people on Twitter.
Media.
I'm not actively looking at my portfolio or anything like that.
Yeah.
But I'm just assuming that things are down. But the so for many of my core positions, not concerned. However, there are some positions, such as my Alibaba position, which I've said I did a live stream a few weeks back on my channel where I talked about how I did the wrong approach with position sizing for Alibaba. Um, I put too much in it, and that's kind of the only stock that my mind goes to thinking, wow, I really wish I had extra cash. Obviously, you can't anticipate what happens with your positions in the short term or the long term
Could,
necessarily. So,
could you
um,
summarize what your thinking was there, and that why was it too much? Like you wanted a dollar cost average sort of thing, or
um,
what do you
well,
mean?
it was too much. Well, primarily because that it's gone down just so precipitously.
Well, you couldn't
But
have
I
guessed that
think,
at the time, like
yeah,
you're saying
yeah,
you would have changed how you done it, like trying to
yeah.
remove hindsight from this. How
I
why
wanted,
would you have changed it?
yeah, I probably put maybe a 20% bet in it.
Hmm.
And I think I was overconfident and uh, maybe over reliant on sort of just the, how do you say, the reputation of Alibaba at the time within the value investing community. So I thought I had done the research, but as it continues to go down, it's not like I'm losing sleep over it, but it's one thing that I keep thinking about, and I think if I had maybe had a smaller position in it. Guy Spear, for instance, has talked about this in maybe the podcast with Investing with Tom. I think he was
Hmm.
talking about this, but um, making position sizes in companies that maybe you're not as confident
Crazy
in.
about,
Yeah, yeah.
yeah,
And if you lose 5 or so percent of your portfolio, but it's not going to keep you up at night. So
sure.
it was a learning opportunity for me. I haven't sold any, but I still believe it's a good business, but it's making me reevaluate the way that I approach some types of companies that maybe, I've never been a customer of Alibaba. I'm a big believer in the future prospects of the business, especially the cloud business. But uh, you know, those are some things that, in hindsight, I should have been more aware of my shortcomings on that front.
So would you be applying this sort of rule of not doing a full 20% bet? Is that wouldn't be for all stocks? It would be just for stocks you have not as much personal conviction behind? Is it just
Maybe,
like a
yeah,
conviction thing or an expertise thing?
yeah, probably, but both. So
Mm,
I thought the hard thing is, though, I thought I had conviction,
yeah,
but it ended up that maybe I was tricking myself just a little bit. So
I see.
it kind of opened my eyes a little bit to so many unpredictable variables. I didn't recognize that there was such a threat from government action that could potentially influence the stock. So,
Fair.
needless to say, I still think it's an invaluable business within China. So, you know,
Right,
that doesn't change.
right.
It's just,
But that makes sense in that you got kind of caught up. A lot of people did with Munger makes the big bet, makes the big bet again. It's like that's, like this is great. This vote of confidence, and then it's kind of an echo chamber within our little value space, our value corner. Um, but then you got to remember to still do your own work and appreciate the risks. Which sometimes it's very even if you did it again, you might have come to the same conclusion at the time, just because you never know what you're really going to find. Um, but yeah, that makes sense. Um, but what are your thoughts on China in general? Are you looking? Are there like particular sectors, geographies that you're looking towards, or would you want to add another more Chinese stocks or more to your existing Chinese positions if besides Baba? Um, I know you mentioned Nintendo and uh, what was the other one again? Nintendo uh,
Daily Journal as far
and
as,
Daily Journal. Yeah, Nintendo and Daily Journal. Those two are high on your list. Um, any others within the portfolio? I know Daily Journal
um,
isn't in it yet, but
yeah. Well, first to touch on my overall thoughts on China, I guess this whole experience has made me realize I'm probably never going to be an expert in China. So
mm,
it's always kind of a walking a tightrope. Probably going to be walking a tightrope for me investing in China. I definitely understand the attractiveness of both Alibaba and Tencent, um, but yeah, I hesitate to. I don't know. Maybe it's just because the only reason I'm thinking this is because I have an unrealized loss so far with Alibaba.
sure,
Um,
sure, a little bias.
yeah, so maybe I'm just a little approaching it with a little trepidation. But I
It'd be
think
hard
that
not to. It'd be hard
yeah,
not to.
yeah, the government has um, made some recent commentary that has me hopeful that they're actually acknowledging that maybe what they did hurt their capital markets a little bit too much. The SEC and the Chinese government are hopefully coming to a conclusion about the reporting issues. So there are a lot of unanswered questions, unknowns that probably are scaring most investors away from China right now.
Sure.
And it's kind of surprising, but at the same time, I understand. There's probably a lot of people who are thinking just like me that there's too many unknowns. So
Yeah.
I'm probably just going to cool it on China, just hold strong for the next while with Alibaba, and just hopefully let the fundamental business just continue to thrive. So we'll see.
Yeah. We've got our man Brad here, the
Hi,
stock
Brad.
compounder himself, saying that nobody is an expert on an entire country, and that's true. Countries are
True.
big places.
True.
Though there are some small countries out there, you could probably get pretty close. For a big one like China or the US, or it's gonna be hard to become a proper expert on everything in it. There's a lot going on.
Mhm. Yeah. But it's been an interesting experience because it's making me focus more on countries that I think are as close to the United States as maybe as possible for the
Sure.
time being. Um, the interview, I've been listening to a lot of Guy Spier recently, and he's been talking about this, how he pretty much, except for the exception with China, with Alibaba, and then his Prosus investment, he doesn't want to invest in places where, say, the press can be subdued or silenced.
Yeah.
So it's just got me thinking about,
Yeah. I've some similar feelings with China. It's like you do see the appeal. Everyone, at least folks in the value investing community, tend to talk about the appeal. Maybe not the mass media as much, but there are clear risks that are kind of hard to really understand, and the government's obviously a bit of a live wire. The Lord giveth and the Lord taketh away. So like you always have that threat, and that's a big reason I haven't made Alibaba a much bigger position than it is for me. It's I think about a 10% bet. And that's grown since it's fallen down to like under 100 or wherever it is now.
mhm,
But yeah, I similar hesitations on going harder into China, partly from just like a lack of, uh, dare I say, experience with dealing with that sort of risk, and just I don't really know what exactly to expect with a lot of those things, um, with the Chinese government in particular.
yeah. I mean, there were a lot of signals to me that made me think a lot of intelligent people have thought about this, and probably more deeply than I ever could. So that gave me some confidence, but how dangerous
Yeah,
that can get. So
and
yeah.
to that, actually, the my biggest reservation with getting into China in the first place was accounting fraud, just because I didn't really know what to believe. We had Luckin Coffee, and other very large frauds that made their way through, because they basically function on a full different set of auditing rules. Even though there's like big four accounting firms doing it, it's not really the big four accounting firms. It's their Chinese subsidiary version that's played by different rules.
Hmm.
So that's was my biggest reservation up front. But then you see someone like Charlie Munger go in. That's a huge vote of confidence. It's like, okay, so if he's willing to take that risk, then yeah, maybe there's maybe I'm overblowing the potential risk there. But it's always in the back of my mind. So like it's a different set of rules. I don't really understand them quite as much, and it could come back to bite me. So as long as I recognize that, like, then that's the only way I can really go forward with it. Um, how much do you weigh those sort of macro level risks? I would kind of call that a macro risk, and like, what's the government going to do? Uh, is that a big part of your analysis, and or is it just kind of like a blanket assumption and everything? Like the government in any country could always just throw this down the trash, and then that's it, and you just discount it appropriately from there, or is it like a bigger consideration for certain stocks for you?
Well, I don't have a ton of experience investing outside of the United States.
Mhm.
Besides, I think Alibaba was probably my first big foray into it.
But even within the
Um,
U.S., I mean,
yeah, no, not really. I think it's really important to go from the ground up. Um, and macro can affect things like it potentially is right now, but the best businesses, which is what I'm generally hunting for, should be fine in most macro environments, unless, I mean, something disastrous is happening. So I thought you were going to ask me how much I weigh, because you paused right after that.
No, did not mean for that. But that makes sense with because it's so hard to predict macro events, even smaller sections of macro. There's so many different push pull factors that you have to weigh, and who knows, and then you're inevitably just kind of doing a dice roll anyways. Whereas if you just look at the individual business, it's a lot easier to just to understand, and will probably take a lot less time because of that. And if you just focus on the individual deal, it's a lot more actionable than trying to guess on where huge market forces are going to move. I mean, like here in the U.S., what I keep thinking is everyone's worried about interest rates going up, right? Rightfully so. It's painful for a lot of people, but just as easily as they can go up, they can be brought right back down, and all of a sudden you have a big bull market again, or something like that, or some crazy QE quantitative easing program opens up, government spends a ton of money, and then all of a sudden stocks look wonderful again.
Yeah.
So it could always turn right back around. I'm not saying that's likely or not, but it could happen, and it could happen in a week. Things can move pretty fast on the macro front. That's what's probably most surprising, and how fast things can change. Look where we were just even a few months ago, just totally different sentiment. And the market will do that on its own anyways. Sentiment changes in a short period of time.
For sure.
Especially in individual stocks. Are you tempted to, actually, I don't even know, do you have any index funds within your overall portfolio? Maybe in your retirement accounts if you have those, or are you fully individual stocks?
No, I have my 401k through work is pretty much, I think it's all S&P 500. Just that's, I haven't really messed with it. I don't know.
You probably don't have many options to anyways.
I think I can link it to my brokerage account, but I'm just not going to go there. I'm going to let it ride.
Safety net.
Safety net. Yeah.
Yeah.
It's fine. I don't need to maximize my, whatever, worrying about different accounts and stuff. So.
You'd be maximizing it both ways too.
Right.
if you happen to make a mistake and that's your retirement account, that's your safety net right there. So yeah. It's probably good. It's probably good just to have that for almost peace of mind. It's like we're venturing off into this dangerous place of stock picking. Not that the broader market can't go down over the long term too, but history would suggest that index funds are a quote unquote easy way to make okay returns, at least if history is a guide.
Whereas classic insurance against my own stupidity.
Exactly.
It's fine.
I'm trying to get to that coasting financial independence level, where you have enough in your retirement accounts or your kind of long-term passive accounts to where if you didn't add anything else to them, by the time you reached whatever you wanted your retirement age to be, you would still have like a okay retirement set to go. That's kind of like the first level to shoot for, is have enough to where market gains could carry you to your 50 plus, 60 plus year old retirement. And once you get that, then you can focus on maybe some of the other stuff like very early retirement or something like that, full financial independence, which I think is what we're all probably going for in this investing YouTube space.
Yeah, I think there's a bunch of different categories in that regard. There's lean fire, there's fat fire, and then there's just being able to choose what you do with your time, because that's maybe even below lean fire a little bit, which that's the first goal for me. Maybe lean fire and that are the same, but
are you trying to push it? Are you trying to go for very early financial independence? Is that like top priority, or how do you weigh that? Not how much do you weigh? How do you weigh that?
Yes and no. It's the thing I probably think about the most, but some of my actions are not congruent with that. So that there's some shaping up to be done in that regard. I'm not always as frugal as I should be. So
I'd imagine, just because you're probably a pretty disciplined financial guy, even if you aren't as frugal as you could be, what are we talking about? A year or two that you're really going to make a big difference. In the grand scheme of things, it's probably not all that bad.
Yeah.
Or even if it's 5 years, compare that to 40 or something. It's probably not
Yeah.
40 years difference, I should say. Then, it's like whatever. You got to live a slightly cushier life in the meantime.
Yeah.
Not such a bad thing.
The bigger concern on that front is if you're spending that time doing something that you despise,
Yeah.
all the while, hoping and dreaming and wishing for your time to be your own. So I think that's even more important. So fortunately, I do enjoy my time. So I'm not.
Yeah.
That's why I think maybe sometimes, it's okay.
Yeah. And that's one thing I think a lot of people don't necessarily focus on with the whole early financial independence game is there's a substantial number of people who do hate what they do and they just want to get out and like, okay, go for it. Good for them. Make your money and get out. But it's not such a bad thing to have a decent job and still reach financial independence and then you could stay, but then there's no like financial pressure to it. And if you need to make a hard decision, it's not so hard when you don't have the financial burden over you because you can take care of it. Or if there's some emergency, like it's not like it's a bad thing to have, even if you like your job. Which
Agreed.
I don't think many people talk about that. A lot of them are just like, you get out of your 9 to 5, you hate it. Like, come on, buy real estate, get out of there. But yeah, a lot of people don't. A lot of people are very jaded towards jobs in this space.
Yeah. Jason says in the comments, people need to work, find something you like.
Yes, sir. Hi, Jason.
It's totally the case. I mean, yeah, it is unfortunate if you find yourself in a situation that is less than ideal for your interests and your goals.
Right. And it's easier said than done, of course. Though probably slightly easier now than normal with the amount of jobs open. you got some decent amount of choices.
Yeah.
And
a lot of jobs open, a lot of remote opportunities in some cases. So.
And even with the internet, there's a lot of opportunity to build a following, build some sort of online business, whether it's your own personal brand or not. There are a lot of ways to make money in internet age, as long as you put the time in and try to understand it. There's so much out there. So even if you're not fully financial independent, you can still potentially work for yourself or run some business and do something a little bit more in line with what you would rather do. So it's always worth looking into those things. If you do hate your job, but maybe you're not making much and it would take a long time to really reach proper financial independence, like there's other things you could still do in the meantime.
Yeah. I think I forget who it was. Maybe it was Ali Abdaal, who's a pretty big YouTuber. He said, "Productize yourself, if nothing else." So.
Sure, not a bad idea. Taking a look at the chat here. Hi, Tim.
Hey, Tim.
Tim is a loyal subscriber. Good to see Kyle Grimm here.
Hello, Kyle.
Master of TikTok with a nice YouTube channel himself. I got a question here from Andrew. When we get a couple of these questions here. Classic question. What do you think is more important, the business itself or the margin of safety? I'll defer that to you, CJ.
That's a good question. I guess. All right, this is the way I'll answer it. If the business is a bad one, a declining one, then the margin of safety is the only thing that matters.
Fair.
And if the business is a great one, then I'm willing to pay maybe even what the intrinsic value is that I calculated. So I don't think that there's unfortunately one answer to that. I know that's a cop out, but
I've got to follow up on that though, because you said that you're separating margin of safety from the intrinsic value. And a lot of people, and you sound like you're pretty methodical with it in that you're always going to want some sort of margin of safety with like a poor business, like you just said. But then doesn't that mean that the intrinsic value always should include that margin of safety, if you know what I mean? It's like, why decouple that? Why not just increase your discount rate or whatever you're doing to value the business?
I don't know. That's a good question.
I guess it's
I
really
think
not that important. It gets you to the same point at the end. I just
yeah,
kind of wonder.
think it's maybe the way I think about it is if maybe I'm looking at a business that's not so great, but the market is pricing it at less than 50% of its liquidation value, for instance. I'm fully aware that I'll call the intrinsic value the liquidation value, but that intrinsic value can slowly creep down over time, and then the margin of safety disappears. So I, that's just the way that I think about it, I guess.
Yeah,
Um,
it gets you to the same spot at the end. Just kind
yeah.
of wondered. Yeah. Yeah, I don't think I could answer that any better. They're kind of different sides of the same coin, sort of. It's value versus it's really they're both parts of the value. It's like the quality of the business versus cheapness. Um, so
Yeah,
it's a spectrum either way.
yeah, if you pay 80 times earnings for Coca-Cola, for instance, it's not going to turn out to be a good investment for you, even though the business is great.
Right.
So, yeah.
So they're both factored in any case.
Mm-hmm.
But still a good question nonetheless. Got one from Jason here. Is Carvana going bankrupt? And if it's not, is it? And if it's not, is it a clear buy at this point due to the high demand for that way of buying a car? So I won't conclude whether it's going bankrupt, but when I saw how much money they were losing, I immediately just kind of looked away. I haven't really bothered to look, and their stock price has just been in free fall lately. So I'm not. Really,
okay.
Go ahead.
Oh, I don't know if you saw. I think Brad tweeted this out earlier that Rob Vinall added maybe 200 and some percent to his position in Carvana.
I was going to mention that he's doubled down yet. He's doubled down a couple times, I think. He already had a big position, so this is a huge ad. I don't see it. I don't get it, but he sees something. So, and he's a talented investor. So, it's not in my wheelhouse, I guess. You have any thoughts on Carvana?
Not really. I'm not interested.
Yeah.
Yeah, it's complicated. Maybe too complicated. Even though Rob Vinall clearly believes in the business.
Yeah.
Seems like a lot of shenanigans going on, but we'll see. I'm probably wrong.
It's a good way to put it. Lots of shenanigans. Frank's in the house. Good to see you, Frank.
What's up, Frank?
So, man, the sea of red every day, man. It's exhausting me. I know you said it's not exhausting you, but man, for some reason, even with a relatively small portfolio, it can be exhausting. What are your tips for stoicism? Do you have a routine? Is it just simply not looking at it? Like, is it what's the mental framework here?
Be busy with other things.
That's a good idea.
Really be happy with the businesses that you own, and read the Stoics. So those are all key components to it.
Not a bad idea.
This is one that I'm reading right now.
Well, wait, Seneca. Which one is that?
It's on the shortness of life.
Oh,
life is long if you know how to use it. I never read these essays before, but I think it's always really good to actually literally have the Stoics around with you to fall back onto. I think it's an underrated part of the whole value investing framework is the Stoicism aspect. Maybe I'm just wired that way though.
Because you're onto something there, because it's like the point of the spear is it's like a temperament thing, and getting through the BS that the market throws you, because that's what also helps you on the back end or front end, however you want to look at it, in that the market gets euphoric at times, and that's when you can sell high, and it gets manic depressive or whatever, and you can and that's when your buying opportunities are, and that spread is where you make your money. These things take a long time, so you need to have the patience for it, and that's what's exhausting. But if you are patient, then you should do all right. Far easier said than done, of course, because we're not really wired that way generally.
Yeah.
You think it's a innate thing? Is it trained? Is Is it a muscle you just have to exercise?
I think there's partial training that can be evolved for sure, because I mean the Stoics write about that. You mostly have to train yourself to be this way, but I think there are probably some people that have some type of lowered lever on maybe the spectrum of fear or whatever it might be. Um, I mean, Warren Buffett and Bill Gates, for example, seem to be guys that are just completely unbothered. But you never see the personal side, so who knows? That's all completely speculation.
It also is slightly easier to be unbothered when you're a billionaire, but at least I would think.
Yeah.
Who knows? At least financially.
One of the greatest gifts to the financial community would be if Warren Buffett had kept a journal while he was running his partnership.
Oh yeah.
That would be so fascinating.
That's what's so cool about this age, the amount of documentation going on, and seeing what entrepreneurs, small and even larger business owners are doing and thinking when they're going through things, and everything's documented. It's a double-edged sword. There are some negatives with that too, but it is really interesting to see when someone's documented something in real time. I mean, which is part of what we're doing here on YouTube. We're documenting our thinking, our ideas on certain things. And then you can go back 10 years from now and see what you were thinking as a young whippersnapper. And I think that's kind of interesting. And it's also good for learning too, in that people will critique you. They'll come up with, or they'll say, hey, what about this idea? And that can get you going down another rabbit hole, and you can build your skills that way. So it's cool.
Sure.
It's a cool world. It's a cool world.
Yeah.
We've got a couple minutes before I got to do a hard stop, but why don't we hit a few of these comments?
All right.
Our man Frank says, thoughts on a basket of merger arbitrage with spreads over 10%, or spreads over 10%, like Activision or Twitter, which are both going through mergers right now. If markets are unlikely to return 10%, is merger arbitrage an interesting way around that? I've definitely given that some thought, but not enough to pull the trigger. I'd be interested in buying like a Twitter share just to see what happens, because it's supposed to be taken private, but would you get to keep your share potentially? I know Elon has said he wants to keep people on board, so I'd be interested more on that side, just seeing what's going on behind the scenes a little bit more than I might otherwise.
The logistics of all that's going to be interesting.
Yeah. As for Activision, personally, I think there's going to be some serious antitrust issues, whether justified or not. So that just kind of makes me think it'll either take a very long time or there'll be problems. That might not be the case. I'm not sure. It's just a hunch, but that's why I really haven't gone for that either.
Yeah, with Twitter, I'm probably not interested in buying Twitter, but I would be interested in Activision. I mean, quite seriously interested in Activision. One, because I like the economics of the business. It's one that I wouldn't mind owning, even if there's some serious antitrust issues, and the deal falls through. And I think Microsoft probably isn't the only buyer. I was listening to Focus Compounding. They were doing a podcast about Activision, and that really gave me some good thinking points.
Who else would potentially buy? It's such a huge purchase.
Yeah, I mean there are
one of the other tech giants
in the United States. Yeah, it could be Tencent. Who knows?
Yeah, yeah, I guess so. Yeah, it's only a select group of buyers at that level.
Yeah, but I think any of them would be very excited to own the assets.
Yeah,
in the IP that Activision has.
Yeah, true.
But I mean, Buffett's buying over 10% of the company.
Yeah, that was a little surprising, but I guess it fits into that scale issue he has. He needs big bets, and it fits because it's a large deal. So, and he's got plenty of cash to go around, I guess.
Mm-hmm.
It's an interesting strategy, though, but could work quite well. But you have to really understand the chances of deals going through and have better understanding of the consequences of what happens if someone pulls out, which could always happen.
Right. Yeah. And position sizing, that would be something that I would have to think pretty hard about on that.
Yeah.
Because of opportunity cost as well. So.
Right. I got time for maybe one more question.
That was not a rapid fire answer.
No, it's a good question though. We could talk about real estate from our real estate guy, Kyle. Does the current market situation make you think of putting more into real estate? I guess with interest rates rising, or or you think about placing money elsewhere? I'll flip it to you, CJ. Are you looking to buy real estate in the near future, whether for yourself? I know you're saying you didn't want to upgrade your house or anything, but maybe as a rental property. Is that in the timeline?
No, because I don't I don't have the I'm not handy, so I don't want to be a landlord, and I
Sure,
don't think I have the time to manage the relationships with some other management company or something like that.
fair
So
enough.
it's more of a practical thing for me. I just
Yeah,
if
you got to
maybe
want
I
to
can
do it.
earn the same the same potentially in the market or
Yeah,
more. That's where I'm more confident at least. So
that's fair.
yeah.
As for me, Kyle, I was saying earlier in the show, I'm not sure if you're on, but I'm going to be making another purchase for my primary residence this summer, at least. And then I am looking for deals always, and probably not as aggressively as I could be. Um, I know you're in the mobile home space, so like that's a whole different ball game. I'd be interested to learn more about that. But I am looking, and I'm pretty optimistic that if rates keep going up, we'll probably see some sort of price consequences, and maybe some the yields will start going up too, and prices will come down a bit. And but I'm only guessing. We'll see what actually happens. But I got my eyes peeled. So with that, I have to get going, CJ. I appreciate you taking the time. This was great. We'll have to get together again sometime soon. Maybe we can film something in person. I thought about that, but I realized I don't really have anything set up in my house, so I don't know where. At some point, we should do some sort of collaboration in person. I think that'd be
Yeah,
fun.
for sure. We've got some
Yeah.
gear. We can get it together.
Yeah, I've got some gear as well, so we'd be flooded with gear. It'd just be finding
Yes.
a place. Alrighty, thanks, CJ. Appreciate it, and thank you everyone for stopping by. Like, comment, subscribe, all that great stuff. Check out CJ's channel as well. But until next time, everyone,